Hello and welcome everyone to this week's COT review. I'm Thomas from COTbase.com. Today we're going to have a look at the 37th COT report in 2014. As usual, we're going to start off with the changes in commercials position. So here we go. As you can see, we've got currencies on top. Starting with the New Zealand dollar with a 43% change in commercials positions, 43 in large speculators and 34 in small speculators. You can see the changes over here being much larger than average. Maybe the largest or the second largest on this 52 weeks time range. It is an unquestionable bullish COT change signal. If we look at the previous major change similar to this one, at the time when this was visible for every of you, you can see that just right after the signal, we couldn't see a direct increase in prices. So I wouldn't say this was a very effective signal back then. But of course, we can find larger changes in the past and see whether those were more effective. But one thing's for sure, both commercials and large speculators have decreased their positions to net zero, and small speculators are heavily pessimistic about this market, which of course is a good sign. A good sign for anyone who's considering a long trade. This is of course more of a bullish picture we've got. You can see the extreme situation again, more bullish signals. You can see how well the New Zealand dollar reacted to these larger extremes in the past. So again, this is a signal that we may see a bit of a rise in prices in the near future. British pound, our next market, 37% change over there in commercials positions. You can see large speculators just becoming net short at the moment, small and of course commercials net long. This change is larger than average. It is a bullish COT change signal. Let's have a look at the 5-year chart and see how extreme the market became. We're moving away from bearish extreme levels. You can see how well this extreme signaled the top over here. Since then, prices have declined. We are seeing more of a relative extreme right now. I wouldn't say it's that large. You can see that around 100,000 contracts net long level in case of commercials is a level where we can really talk about a significant extreme. So that's that. Moving on to the dollar index, we not only have a large change, we've also got an all-time COT extreme in commercials position. So two very great signals at the same time. Of course, this change signal is a bearish one, and also the extreme situation is a bearish extreme as well. So you can see that we've reached an important level here, and whenever the dollar index was at such levels, you can see that more or less all the time it ended the rally that was happening in the dollar index back then. Moving on to large speculators COT Extreme, here we go. Rough rice, soybeans, and Russell 2000. Let's start with rough rice. We have an all-time extreme over there, and 1,145 report extreme in commercials. So huge extreme in all major participants of the market. It is of course a bullish COT extreme signal. We've talked about this market last week. The picture has not changed dramatically. We see that prices have gone higher, and we're expecting this to continue in the maybe even near term, but it's definitely gonna well, there's nothing definite in markets, but there's a great chance that it's gonna the rally is gonna happen in the medium to long term. Soybeans are next market, 415 report extreme in large speculators, and all-time COT extreme in commercials and small speculators. Let's open the 5-year chart. Here we go. You can see over here how significant this extreme is, and of course it is a similarly a bullish COT extreme signal. So there's really not much to say over here other than if you look at the chart, you may see how well these extreme signals were effective in the soybeans market. And last but not least, we've got the Russell 2000 with a 310 report extreme in large speculators, the same extreme in commercials. This time we are talking about a bullish extreme. You may Remember that a few months ago, actually more than almost a year ago, we were talking about bearish extremes. Well, now we're talking about bullish extremes, which is of course interesting, seeing prices so high, but still the extreme is pretty visible and might probably push prices even higher from these levels. That's going to be all for this week. If you'd like to have a look at the COT charts, you can do so at our COT charts page for free. If you'd like to have more in-depth and detailed COT analysis, then it's this page that we're doing the review about, where you can add other great functions to the table, look at new COT report types, other data types, or other COT report dates if you would like to do your historical analysis. I hope you enjoyed my review, and I hope to see you next week. Have a great weekend. Take care. Bye-bye.